Bandi, go ahead.
Good afternoon, everybody, and welcome to Sangam India Limited Management Call. We have on the call Mr. Anurag Soni, Managing Director, and Mr. S.N. Modani, Vice Chairman of Sangam India Limited. I must remind you that the discussion on today's call may include certain forward-looking statements and must therefore be in conjunction with the risk that the company faces. May I now request Mr. Anurag Soni to take us through the company's business and performance, and Mr. S.N. Modani through the outlook, after which we will open the floor for Q&A. Thank you, and over to you, sir.
Hi, good afternoon, everyone. Thank you for joining us today on Sangam India Limited Management Meet. As this is our first interaction, we would like to discuss the journey, followed by strategic updates and performance highlights. Our investor presentation has been uploaded on this exchange, and we hope you have had the opportunity to review it. Sangam India Limited personifies India's growth journey with a rich history spanning 4 decades, marked by expertise and a commitment to excellence. As global leaders in PV dyed yarn and prominent players in the denim sector, we have maintained a leadership position by consistently delivering high-quality products. Our workforce comprises over 12,000 skilled employees, has been our true assets, and has been instrumental in our success. This dedicated team has helped us secure significant market share in the textile sector, serving marquee clientele. Our growth story reflects not only our ability to meet market demands, but also our commitment to operational efficiency and customer satisfaction. Today, we operate as an integrated textile player, spanning across the entire textile value chain, operating 5 manufacturing plants in Rajasthan. We export to over 60 countries globally, specializing in PV yarn, PV fabric, and denim fabrics. We are one of the most diversified textile producers in the country with integrated in-house facilities. This high level of integrations help us to be highly cost competitive over our peers. Over the last 6 years, Sangam India Limited has transformed into a value-added textile player marked by a strategic shift towards high value-added products. This transition has propelled margin expansion, reflecting a dedication to enhancing profitability. Our EBITDA has doubled during this period, while EBITDA margins have improved from 8% to 11%. Value additions and improved operational efficiency and cost management have played a role here. I would now like to hand over the mic to our Vice Chairman, Mr. S.N. Modani.
Good afternoon, everyone. Thanks for joining us today. Our company stands at the forefront of innovation and excellence in the textile industry, maintaining our position and price leader. Today, around we have 300,000 spindles with us, and with 2,500 rotors for open end yarn. And we possess a formidable production capacity of more than 1 lakh tons per annum. The expensive capability allows us to meet the diverse needs of our clientele with maintaining stringent quality standards. The garment division has seen remarkable growth, with revenue surging 4.4 times over the past 6 years, now contributing 3% of SIL's revenue, with a manufacturing capacity of 114 state-of-the-art seamless garment knitting machines from San Antonio, Italy. We are equipped to meet diverse demands. We use cutting-edge machinery for our operations, which are sourced from, as I said, the world leader in the seamless garments, San Antonio, Italy. 90% contribution comes domestically, whereas 10% is from exports. On the denim front, revenue increased 2.2x in the past 6 years. The Sangam brand is well placed in the domestic market. Internationally, we collaborate with the leading brands. Leveraging our expertise and state-of-the-art facilities to meet their exacting standards, our dedication to quality, underscored by the state-of-the-art lab setup, ensuring stringent quality controls throughout the manufacturing process, with a production capacity of 48 million meters per annum, supported by 5 indigo processing lines and 302 weaving machines. We are equipped to meet demands of our customers efficiently and effectively. Lastly, We have gained significant market share in synthetic fabric. Our company holds a prominent position in the fabric processing industry, specializing in a range of fabrics. Our capex plan is of 792 crores to fuel our future growth. This strategic move has allowed us to develop a diversified and resilient business model, supported by a strong presence throughout the value chain. By maintaining a varied revenue base and competitive pricing strategy alongside our backward integrated approach, we have effectively mitigated risk associated with market fluctuations. Our capex is supported by long-term debt, and we are currently in a comfortable position in terms of debt repayments. Our debt repayments are funded internally through accruals, a testament to our strong financial stability. I would now like to hand over the mic to Anurag Soni to discuss the performance highlights. Thank you.
Coming to the financial performance for the last quarter ended December 24, our revenue from operations was at 621 crores, which was a slight increase year on year of about 3%, and EBITDA levels were at 48 crores with a margin percentage of 8%. There was a decline of 18% year on year on the EBITDA front. Now, looking forward to the next couple of years, our focus is on advancing up the value chain into fabric and garment production. We are undertaking significant capex plans to cater to the emerging opportunities in these segments. We're targeting a top line of about 4,000 crores while ensuring EBITDA margins remain steady at about 12.5%. Our strategic agenda includes maximizing return on equity and leveraging capital expenditure to sustain long-term growth. Additionally, we are poised to enhance margins by offering value-added products. With this, I would like to conclude my opening remarks. We can now open the floor for questions.
Participants, please raise your hands and form a queue for the questions. Yes, Mr. Saket, you may go ahead and ask your question.
Yeah, namaskar, sir. And sir, firstly, thank you for this opportunity and for detailing and a very detailed presentation also. Sir, firstly, sir, अगर आप थोड़ा भी इंडस्ट्री का आउटलुक फर्स्टली बताते हैं कि क्योंकि सर जो लास्ट क्वार्टर के नंबर्स हैं उनमें मार्जिन्स काफी कंप्रेस्ड हैं हमारे, और वी हैव आउटलाइंड अ लार्ज कैपेक्स आल्सो, जो आप FY26 के लिए जो आपने आउटलाइन किया है, वो कैपेक्स में अभी हम कहाँ पर हैं, कितना हमने स्पेंड कर लिया है, और करंट बिजनेस एनवायरनमेंट कितना कंड्यूसिव है इस कैपेक्स को सप्लीमेंट करने के लिए, अगर इस पे सर आप कुछ पहले उल्लेख करते हैं.
Thank you, Saket ji. So I will answer the question with regards to the आज का मार्केट सिनेरियो और हमारा कैपेक्स कब तक हो रहा है. तो हमारा कैपेक्स अभी करीबन जो 800 करोड़ का आउटलाइन है, ये स्टार्टिंग 2 quarters फ्रॉम नाउ, एंड उसके बाद मतलब Q1 FY25 तक हमारा सारा कैपेक्स कंप्लीट हो जाएगा. हमारा कैपेक्स सारा इंटेंडेड है टुवर्ड्स वन कॉस्ट रिडक्शन जो मार्जिन्स को हेल्प करेगा, और दूसरा ग्रोथ in the segments where we want to add value, basically fabrics and garments. So if we see our turnovers from yarn are consistently coming down quarter on quarter, and we expect कि next after completing all these capex, we will be able to generate about 2/3 of our revenue from the fabric and garment division, and about 1/3 will remain from yarn. So that will add to the margins. Now, secondly, with regards to the industry scenario, so there has been pressure over the last 6 to 8 quarters. There has been continuous downfall in pricing. In fact, as we stand today, we are probably at the bottom of the pricing levels over the last 6 to 8 quarters. ये majorly impacted था due to export markets because there was a crackdown on inflation by most governments. So commodity prices were constantly crashing. Cotton prices have halved from the peak. So now we see that things are improving. Prices have bottomed out. In fact, probably in the current quarter also, we should see some kind of improvements coming in, and every quarter we should see some kind of support from the market. तो उससे थोड़ा margins में support आना चाहिए. So industry outlook तो अभी यही है कि prices have most likely bottomed out and we should see some improvements, and also already there is some demand that has started to come in from the export markets as well. तो वो थोड़ा इसको help करेगा sustain करने में.
सर करंटली अभी हमारा यूटिलाइजेशन लेवल्स क्या है across for both yarn and the fabric segment? And sir, as you mentioned that we are planning and we envisage going ahead our yarn proportion to be 1/3 and 2/3 to be fabric. That is what you mentioned, sir.
Right.
Post the expansion.
Right.
Okay. And sir, in the fabric segment, it will be B2C business we will be doing, or what is?
फैब्रिक सेगमेंट का ऐसा है कि कुछ तो B2C थोड़ा बहुत होगा, बट इसमें देयर इज अ लॉट ऑफ सो न्यू कस्टमर्स दैट आर कमिंग इन आर बेसिकली गारमेंट manufacturers and also brands who nominate garmenters. So basically we are dealing directly with brands like, so international brands like Primark, Decathlon, Mango, Jockey. So they are nominating our fabric to their garmenters, who in turn buy from us and are supplying to these brands. So that is the business model there. Now yarn का जो आपने बोला कि so currently we are about 42 to 45% of revenue comes from yarn, and going forward ये 1/3 2/3 हो जाएगा.
सर करंट यूटिलाइजेशन लेवल्स अभी कैसे चल रहे हैं?
यूटिलाइजेशन लेवल्स डेनिम और जो हमारा डेनिम फैब्रिक और पीवी फैब्रिक है उसमें लगभग about we are running at about 90% levels, and yarn we are running between 80 to 85% levels. So basically capacity utilization is almost at peak levels.
Okay. And sir, currently जैसे आपने बताया कि cotton prices have also stable and from the peak they have halved. So अभी हम क्या inventory carry कर रहे हैं और spreads कैसा है सर हमारा yarn business में?
See, so inventory levels अभी तो हमने थोड़ा build up किया है. So our inventory levels are higher than normal.
Recording की वजह से
Sorry. Yeah. So inventory levels are higher than normal. And because we feel that the prices have bottomed out, so there is stocking happening on that front, and yarn spreads are looking at constantly where we are seeing that इसमें कोई improvements दिख रहे हैं. So we will see some gains there. So it's difficult to point out a number because in a moving market ये थोड़ा difficult हो जाता है, especially commodities में. So but we should see that there will be improvement quarter on quarters.
सर Q3 में जैसे नंबर्स हमने पोस्ट किए हैं, if I look at your PBT नंबर और EBITDA would be better understanding, तो उसमें एक bottoming out process दिख रहा है सर कि आपका Jan-Feb December exit से कैसा रहा in terms of our margins for the yarn business?
See, definitely we can see that December numbers have bottomed out, and we will see that numbers coming in for the subsequent quarters will be better definitely. And इसमें see we are at 8% margin levels at the December number. Now इसमें the biggest deterrent to the margins falling is lower contribution on the yarn spreads, right? So yarn के margins down रहे हैं, and constantly falling prices में stock के losses भी हर quarter लगते रहते हैं, तो उस कारण से pressure रहा है. But because now prices have bottomed out and we see yarn margins improving, तो जो हम आगे का guidance की बात कर रहे हैं कि हम 12-12.5% के ऊपर deliver करना चाहिए. So I think that will that should come in now.
सर कुछ प्रश्न और है, मैं करूं कि should I join the queue?
Yeah, sure, as you wish.
Okay, sir. So firstly, sir, 800 crore capex is what is outlined. You mentioned. So how much have we spent as of 31st December, or this is the pending capex?
792 is a pending capex.
No, it is a total capex. 792 is a total
capex.
committed capex. So how much have we spent? See, exact numbers मैं थोड़ा अगर आपको कॉल के बाद शेयर कर लूँ easy रहेगा. But more or less the equity part has been जो कंपनी को internal accrual से लगाना है. So that has already been done. Debt I think जो about 70-75% of capex है, I think we have drawn down about 15 to 20% levels. So balance is pending.
Okay. You mentioned out of the 800 crore, 75% will be debt.
Yes, so 75% is debt because see there is a promotion the investment promotion scheme of Rajasthan government जो debt के ऊपर interest subvention अच्छा खासा देता है, so that turns out anywhere between 4 to 5%. So it is highly cost competitive. That इससे cheaper capital कोई और available नहीं है. So that is why we try to take as much debt as possible on the projects.
Okay.
तो जो equity है, अगर कुछ भी हम इसमें excess equity or excess cash generated by the company will we go through because our working capital costs are higher. That's about 7.5 to 8%. So we'll try to reduce those numbers rather than long-term loan numbers.
Okay. And the current अभी net debt numbers क्या है हमारे? What is our working capital requirement and long-term borrowing?
So long-term borrowing as on date stands at about 560 crores. Working capital is anywhere between 450 to 500 के बीच में fluctuation चलता रहता है. We see that this number for working capital is more than enough even to sustain future business. So I don't think we should add much working capital there. Term loan will peak at about 850 crores, I think, is what the peak number will come at. That will be about 5-6 quarters from now.
Okay. And taking that interest subvention into account, what should be the blended cost of fund? और separately अगर आप बताना चाहें?
So term loan cost will be, before subsidies it's about 8.5 to 9%. Post subsidies it's below 5. So that is the number for the term loan. Working capital is anywhere between 7.5 to 8%.
Correct, sir. And sir, lastly, what steps are we taking to reduce our power and fuel, the cost of power by investment in the renewable segment? What have been outlined? और सर ये 800 करोड़ के जो कैपेक्स है,
Yeah, actually,
बताइए.
agro-based this boiler. Earlier we were running thermal power plant. We scrapped that. Those ones.
Come again, sir.
We already installed 3 numbers of boiler based on the agro waste.
Okay.
And green energy. And whatever expansion we are doing now, we are putting all the solar power plant on the top rooftops. So that will also reduce the cost in next couple of quarters. And so the capacity in solar is also going to be increased. As on date, it is 16 megawatt.
Right.
And we have a,
Yes. So to add to that, I'll just say that about 8 to 10% of our costs are renewable as on date. And on the steam that is generated for the dyeing process. So all that is shifted to renewable from the thermal side. So that is already in place today. Solar or adding renewable power is part of a long-term strategy. However, अभी जो capex plans हैं वो काफी heavy हैं company में. So we are the focus is to complete these, deliver the numbers that are supposed to be generated out of these capex, and then probably in future we will take steps to further reduce our renewable costs, so power costs. And also going forward, probably a year back the policies from the government were not as favorable as they are probably today. So that is also one of the reasons to wait it out. And also the costs of installing solar plants are coming down drastically day to day. So we are waiting for these things. So probably that's a second step. After these capex are done, तब देखेंगे उसको.
So currently the power and fuel is we are drawing from the grid. The cost of it is the coal grid.
Not from the grid. 10% is self-generated through our solar and wind plants.
Okay, and what is the cost per unit?
Cost per unit from the grid?
Yes.
About 7.5 rupees per unit.
Okay, and sir, how much is the receivable from the road tape part? सरकार का मैंने and total proportion हमारा export कितना है सर? उसके basis पे road tape होगा.
So about 1/3 of our business is coming from exports. And road tape का question आपका with regards to receivable कितना खड़ा है? Is that what you have to ask? Like what is my debtors for receivable?
Yes.
So I think at any point it's about 4 or 5 crores that is pending to be received from the government. बाकी तो this is a tradable script, ना? So you can sell your licenses to importers.
और ये interest subvention की subsidy अभी कितनी unpaid है?
2%. We have received until what quarter? December? March quarter. So December quarter is clear, right? Yeah. So until December quarter money is going to be received in the March quarter. until September, all the money has been received.
अच्छा, लास्ट पॉइंट था ये अदर एक्सपेंसेस का जो लाइन आइटम था, इसमें वी हैव सीन दैट फॉर दिस क्वार्टर देयर इज अ रिडक्शन although your revenue have remained flat. So any cost saving exercise we have done, and this could be a sustainable number. I think so 63 crore is the other expenses. Q1Q we have seen a reduction of 10 crore. Year on year also there is a reduction of 10 crore. So this number is sustainable number now, or what are the key line
So
items?
a couple of things. One, last year, basically, yeah, when we are comparing to last year, the freight costs and exports were very, very high, and then they started coming down drastically, right? So अगर अपन इसको 2 साल पहले से कंपेयर करेंगे तो लास्ट ईयर का नंबर बहुत हाई था, तो उसके सामने अपन इस साल में देख रहे हैं तो थोड़ा लो दिख रहा है, तो मतलब आई वुड से इट इज सस्टेनेबल, बट हाउएवर दीज कॉस्ट जो फ्रेट के होते हैं वो दैट आर बुक्ड अंडर अदर कॉस्ट अदर एक्सपेंसेस, तो उसको थोड़ा सा एंड दैट इज अ सब्सटेंशियल नंबर, ऑलमोस्ट साल का 100 करोड़ का नंबर हो जाता है ये फ्रेट। सो ये एक नंबर है जो फ्लक्चुएट होता है, जो हमारे हाथ में नहीं है। हाउएवर दीज आर ऑलवेज पास्ड ऑन टू द कस्टमर बिकॉज we are selling on CFR basis, we add the freight and in the cost and sell, so it doesn't impact the profitability that much, so I would not read too much into that number.
ओके, सो तो ये नंबर अब सस्टेनेबल रहेंगे अदर एक्सपेंसेस के?
Yes.
63 इसी अनुपात में रहेंगे,
Yes.
मैंने 10% ऑफ आवर रेवेन्यू क्लोजर टू दैट।
हाँ, मतलब 1% here and there, but हाँ रफली यही रहेंगे।
यही रहेंगे। सर एक रेजोल्यूशन आपने लास्ट एक ईजीएम कॉल किया था, जिसमें आपने शायद 11% से 16% पे बैक जो आपका रेन्यूमरेशन पे आउट होता है होल टाइम डायरेक्टर्स का, उसको सर आप एक्सप्लेन करेंगे कि वो एब्सोल्यूट नंबर के हिसाब से या क्या रीजन रहा? क्योंकि सर प्रॉफिटेबिलिटी जब डिप कर रही है अभी आपकी, तो आप क्या मैसेज दे रहे हैं सर इस ये रेजोल्यूशन से सर?
So इसमें मैं क्लैरिफाई करूंगा, there is no incremental payout to directors as on a absolute front. तो जो there is a variable pay and there is a fixed pay that the directors draw. Variable pay directly linked to profits, तो profit ऊपर रहेगा नीचे रहेगा उसके हिसाब से fluctuate होता है। Fixed pay is in line with last year. We had to take this permission because हमारा जो because the overall profits for the year are low, तो वो जो सीलिंग है टोटल रेम्यूनरेशन का वो ब्रेक हो रहा था, इस कारण से उसको करना पड़ा। अदरवाइज जो भी की मैनेजमेंट प्रोफेशनल्स है इन द कंपनी एंड वहाँ पे कोई भी एक्स्ट्रा हम एब्सोल्यूट पेमेंट पे एक्स्ट्रा कुछ करने के लिए कोई मतलब वो नंबर भर नहीं रहा है।
लास्ट ईयर क्या पे आउट था सर एब्सोल्यूट नंबर में?
Just that, Mr. Sakit, sir, we'll take your question
ज्वाइन
in
रखिए मैम,
the
जस्ट
queue.
ये सर से इसका क्लैरिफिकेशन ले लूं बस फिर
So
पीछे आ जाए।
last year का payout, see, because there are about 8 to 10 KMPs, तो exact number देना difficult होगा, but अगर आप ये मतलब maybe after the call I can share in detail with this, मतलब आपको email पे या किस पे share कर लेंगे। I think you can get in touch with our जो email आपको दिया गया उसमें मैं आपको share कर दूँगा।
ठीक है सर, मैं ज्वाइन करता हूँ, थैंक यू।
Thank you, Mr. Saket Kapoor. The next question is from Mr. Darshil Javeri. So please go ahead and ask your question.
Hello, good afternoon. Hope I'm audible.
Yes, yeah.
Yeah. So, thank you so firstly for the detailed presentation and detailed answers. So just I wanted to understand our dependence on market prices or market situations. So we aim to have around 12% plus EBITDA, but then I think market forces somehow will impact that. So, I just wanted to understand number one, like how currently in terms of margins, have we bottomed out, and what would be the trajectory that we can see maybe next year and next to next year? We've given a guidance for FY26, but what about FY25 and Q4 currently? And how much would like our current mix be dependent, that would be dependent on market margins? So, can we just get a segmental breakup of margins? How much does yarn contribute as a percentage or something like that? That would be helpful.
Right. So see, thank you for the question. Now to talk about margins, see, the biggest dependence for the margins on the market is on the yarn side, because there it is commodities like cotton or crude are beyond our control. So there is a lot of dependence on that front. However, the long-term strategy for the company, so we were at probably 5 or 6 years ago, we were at 2/3 yarn and 1/3 fabric. So from there, we are talking of 1/3 yarn and 2/3 fabric. So the more you move up in the value chain, your dependence on these factors reduce. Now it cannot be eliminated, but it can be reduced as much as possible. That is point number one. Now segmental margins, we can say, see, a long-term average for a pure yarn company or a pure yarn business is anywhere between 8 to 10%, right? So if we can see last 8 to 10 years average, that is what the number would come down to. And value addition towards fabrics, you can say you add anywhere between another 8 to 10%. So when you say 2/3 and 1/3, the number pure arithmetic will go up to 14-15%. Or so now from our point of view, we say that okay, today the market scenario is not very favorable. It is probably at the bottom end of the cycle. So we are when we are giving a guidance of about 12 to 12.5%, that is keeping some kind of safety measure in place, and we are saying okay, this is the number that can be delivered, and there is some kind of factoring in that the yarn margins have bottomed out. So that there is a consideration that we have taken into that. So basically, this is the I think in totality, some kind of market improvements, changing from our revenue mix from yarn to fabrics, and and increase in overall revenue. So from 2,700, we are talking about 4,000 crores. So that is again going to add to economies of scale. So all these factors together is going to lead to that number.
Okay. Something related to this, my question is, so what would be the current yarn prices and what kind of yarn prices would we need to, hit the 10% margin? And what kind of inventory losses have we had in current year?
So see, this is difficult. To answer to your first question, that what kind of yarn prices are required to hit the 10% margin. See, yarn prices for us is irrelevant. What is important for us is the delta between the cotton prices and polyester prices, and the yarn prices. So there, the one green lining, the one green shoot is that both polyester and cotton prices have bottomed out and probably increased about 2 to 5% from their bottoms. So those prices being low, we feel that it is favorable that now whatever increase in yarn prices happen are going to aid to the margin. So now that is driven by demand. So there is some export demand that has started to pick up. So that is where the fall had happened, that because exports had dipped drastically because of various reasons beyond our control. So now those numbers are picking up again. So we see that will add to some yarn prices going up, and with raw material prices being favorable, we should see that number shall improve. Sorry, your second part of the question, I missed it. Can you repeat that?
Margins.
Yeah, I think I got the major answer. Just like, what kind of other risk that do you see currently, right? Like that we could face, like that could maybe be a speed bump to our, growth.
I don't think, because
Yes,
as the Indian economy is doing well and exports just picked up,
right.
because the Turkish fiasco and Ukraine and all this will settle down. So things are improving. You see, when after COVID, the pent-up demand came and every company performed 18 months nicely. So the 18 months are going to be complete by June, because we are facing a lot of pressure. So I think there will be a demand. And because India, now let's say the cost of the company, whatever expansion we planned, it is going to reduce in all terms, maybe in overheads, maybe in our and what we are consuming our yarn. So we are saving on the packing cost, we are saving the transportation cost, we are doing a lot of things. So that margin will also,
Add to
the margins in totality. So, and demand is going to be there. I mean, it's not that.
So I think to sum that up, I think we are at the lower end of a cycle. So until there is not a big business risk that we see here on. Now things beyond control, see, there are so many geopolitical developments that happen across the world. So those things are obviously beyond our control. So apart from that, I don't think there's major risks.
Okay. So just last two questions. One, like with our capex, what is the peak revenue that maybe we could achieve, and where would and how fast would it happen, and would we need a second set of capex because if we see certain demand, that would be my first question. And in terms of completion of capex, we are planning by I think Q1 FY26. So till that, because the utilizations are very high, will FY25 be around the similar run rate that we are seeing right now?
So see, our peak number will be at about 4,000 crores top line, and now for the year, the financial year coming up, we can assume a 18 to 20% growth from our current numbers, because there is some capex that already happened in the current year, and the ongoing capex will be there will be some part of that will contribute in the next year. So our projection is about 18 to 20% growth in the next year, and probably we should see a margin level of about 12% in the next year itself.
Oh, perfect, perfect. Thank you so much, sir. Thank you so much for answering so much detailed questions. So that's it. All the best, sir. Uh, yeah, yeah, I'm done. Thank you so much, sir. Thank you so much for answering all the questions. So,
Thank
thank
you.
you.
Yeah. Thank you, Mr. Darshil Javeri. The next question is from Raj Mikwan. Sir, please go ahead and ask your question. Mr. Raj, sir?
Hello, am I audible?
Yes.
Yeah.
I skipped a point on the completion timeline for the capex.
So see, completion timeline for all the capex is about Q1 26. That is what the projection is. But there are there is capex happening in the yarn side for the backward integration of our denim division. There is capex happening on the synthetic fabric division in the denim division. So the timelines are anywhere that are starting from Q1 of 25 and going up to Q1 of 26.
And how much of asset turn are we expecting on this capex?
Sorry, how much?
Asset turn, how much of the peak sales are we able to achieve from this capex?
4,000 crores.
4,000 crores from a capex of 800 crores. So you are expecting at peak, you will be able to do an asset turn of 5x.
No. So 4,000 is total number. So currently we are at 2,700. So that will go up to 4,000, and margin. So see, there are two things happening here. One is the kind of capex that adds the turnover, and then there is some cost cutting capex. So we are talking of both together 4,000 and 12%.
Achha, so how much of this is for increasing the sales?
How much of this is to increase the sales? So I think we are about at least 60-65% is towards increasing sales, and one third would be about cost cutting, and 2/3 would be about.
Because we'll be consuming our yarn captively, so that our ultimate production value will be more, but the turnover, because when it is captively used, so the ultimate turnover will be less, but it will improve the margins.
Yes.
Right?
And also, do we expect the export share to increase going
Definitely
forward?
will increase. It will increase because when the production in terms of meterage and yarns tonnage is going to be increased, so definitely the ratio in exports will also be increased.
So export is about 1/3 of our sales. So it ranges from 30 to 40%. So currently, I think it is at the lower end of that spectrum. So, but I think going forward, we should be anywhere between around 38 to 40%.
Okay. And how much is the price of cotton per candy right now?
It depends upon different qualities of cotton are available, like Rajasthan and Haryana, and then the MAC and Shankar 6. So the Rajasthan cotton is available around 55 to 56,000 per candy, and Shankar 6 around 62,000, and MAC also around 62,000. That is the mostly commonly used cotton up to 40s count. If you go beyond that, then you require DCH and all MAC MMCU5. So that is, we are not in that segment. So the low, I mean, this is the pricing as on date.
All right. Okay, sir. Thank you so much. Have a good day.
Thank you, Mr. Raj Mekwan, for your question. Mr. Varun Gajaria, you may go ahead and ask your question, sir.
Hi, sir. Just a couple of questions. One is that you mentioned that you'll be touching 12% margin in 25. But in 25, there won't be much of garment capex that will be executed, right? So, touching 12% margins, I'm not sure, like, how will that work out?
So garment capex has already happened in the current financial year. So if you see the garment capacity utilization is on the lower side. So we expect that. So I think current year we'll do about 80 crores of business on the garment side. Next year we expect to double this number. So garment capex is already factored in the current year. That is one. Secondly, the majority of the EBITDA is actually going to be added on the fabric front as well. So there the growth is going to be so about 1/3 of the business will come from the denim division, about 5% will come from the garment, and about 25%, 28% will come from the synthetic fabric business. So that is going to be the mix of the business next year. Now, whatever incremental fabric sales are going to happen is going to aid that margin. So even today, as I mentioned earlier, the long-term yarn average for margins is at least about 8 to 10%. And any kind of value addition, let's say another 8 to 10%, and that is 2/3 of my business. So that 12% is a number that we feel is a safe number that we can achieve next year.
Okay. And on yarn front, what is the captive consumption right now, and post expansion, what will be the captive consumption?
Currently, see, 43% of our sales or 44% of sales are coming from yarn. Now that will go down to about 35%.
8% additional.
Yeah.
Okay, so the 8% will get adjusted in captive consumption for manufacturing fabric and garments, I believe. Okay. Okay. Thank you for taking my question.
Thank you, Mr. Varun Gajaria. The next question is from Zaid Munshi. So please go ahead and ask your question.
Yeah, hi, thank you. So my question relates to exports actually, and the free trade agreement that is expected. So as an Indian exporters, we have to pay import duties to Europe and USA, right? Which makes us less competitive as compared to Bangladesh, Vietnam. So I mean, any update on the FTA side and how that will impact our export trajectory? Because in the last 1 year, our exports have also dipped, right?
So see, one that is the duty is on actually on the garment side.
Garment side, not on the yarn side and all.
Yes.
And
So
basically, the market for Europe gateway is Turkey, and Turkey we are supplying a lot of dyed PB dyed yarn, and that's why even if FTA happens with us, so India will get the boost in the garment, and because the Bangladesh is having advantage because of LDC, because it is developed country. But if we have FTA takes place, then Indian garment will be at par and get the better pricing because they have 13% duty advantage, Bangladesh and all. So India is going to take the advantage. So the garments export will take place from India. Therefore, the consumption of Indian fabric will be increased more because otherwise what we are doing, we are selling our fabric to the Bangladesh, they are Sri Lanka and all, they are converting and then they are sending back to the all European market and all. So I think this FTA will help definitely. And what India did with UAE, so a lot of that is a gateway for Africa and all. So a lot of governments, you see the development, I mean, improvement has taken place in the garment export from India to the UAE and all. And so definitely FTA will help the Indian industry.
Right. But as to the timelines of the FTA, that is for anyone to guess. So let
Yeah.
us see when the next government comes in, so how that happens.
Sure. Thank you. Thank you.
Thank you, Mr. Zaid Munshi, for your question. We have another question coming up from Sanika Khimani from Sapphire Capital. She wants to know the market dynamics of the denim industry, as a lot of companies like Mufti and Raymond have indicated a slowdown in this market. So producer of denim fabric, What are we seeing in this market lately?
So, see, overall, when we see the denim production in the country, it is under pressure. The capacity utilizations are low. However, when we talk about Sangam, our capacity utilizations are more than 90%, and we do have a sustainable customer base, and we have also added new customers, new geographies over the last 6 to 8 quarters. We've done a lot of work on that front. So we feel that our numbers and sales and in division should, in fact, for the next year, that is going to be the driving force. So currently we're about 30% of 28% of the business is coming from the denim. We expect 1/3 business to the denim division in the coming year.
Okay. We have next question from Mr. Ketan Athable. He wants to know how much will be the capacity utilization in FY26, including expansion.
The capacity utilization will be at these levels. So at the levels that have been mentioned in our presentation, that is going to be there. And garments will see an improvement definitely. So we should double our garment sales from here.
Okay. Mr. Ketan further wants to know, so that details about C9 brand. Does it entirely consist of garment revenue? And what is the growth rate expected there? And what are the strategic plans for this brand?
C9 contributes about 30 crore, about 25. This year we should close anywhere between 25 to 30 crores top line. No, it is that got nothing to do with government supplies. This is completely B2C. So there is a distribution network in place through which we are selling the C9 garments. And secondly, for the growth plans, I think next year about, we can say anywhere between 10% growth there on that front.
Yes.
Okay. Thank you, sir. We have next question from Akshada Deo. What is debt to equity ratio company wants to maintain going forward?
See, the current debt to equities is below 1. Going forward, see, because there's a heavy capex plan going on, so we see it will peak at 1.25 to 1.3, and then it will come down again post that. So that is the level that so current levels is what the ideal levels are, and this is something that we should maintain as a long-term average.
Thank you. We have another question from Mr. Darshal Javeri. Where is interest aversion recorded in books? We pay full interest, and when government pays us, what's the difference and where is that recorded?
So it is recorded in the finance cost, so it is netted out there.
Mr. Sakit Kapoor, sir, do you have further questions?
Yes, sir. Sir, firstly, if you could give us the peer comparison for the product profile we have in the yarn and the fabric segment, who are we competing in the market currently?
So see, here I would like to say,
your voice is breaking, sir.
So can you hear me now?
Yeah, very clear. Yeah.
So our product portfolio is actually quite diverse. So we are into on the side, we are both in the PV dyed yarn and cotton yarn. And then there is synthetic fabric and denim fabric. So there are actually not many companies in the country with a product portfolio like that. So it is hard to actually compare a like for like with any peer. Having said that, we can have a comparison on the business wise with the leaders in each category. So that is the way I think we look at it.
Okay, so category wise, sir, can you give who are the likely competitors?
Again, there's a list here. If it's okay, we can share a list of peer comparisons maybe after.
Right, sir. Sir, for the raw, hello.
ये करीबन 10-15 कंपनियां हो जाएगी. So it will be a bit much. I'll probably share it. Share it. Email or something.
Okay. सर आपने जैसे अपने प्रेजेंटेशन में विस्कोस के बारे में भी बताया कि वी आर द लार्जेस्ट बायर ऑफ विस्कोस इन द कंट्री फ्रॉम ग्रासिम. सो रॉ मटेरियल के मिक्स में हमारा विस्कोस का कंजम्पशन कितना रहता है, टोटल एनुअल कंजम्पशन?
So on the PV yarn side, it is about 30% of the PV yarn.
Around 13,000 tons of dyed viscose we are consuming annual basis.
13,000 ton. And in turnover, hello?
Yeah, about
Turnover base, what should be the turnover? How much we spend on the viscose in value terms, sorry?
In terms it's 250 crores.
about anywhere between 200.
300 crores. Good dyed.
300 crore for the last year. Total cost of material consumption was 1577. So 20% के आसपास होगा.
Yeah. So that is because we have cotton also, we have a polyester also. So depending upon that, so around 300 crores.
So what is the key advantage there when we take viscose from Grasim? What is the differentiation, and do all PV yarn players have the input of viscose as a raw material, or other petroleum product can also be?
Basically blend of polyester and viscose, and the blend varies from 70% polyester, 30% viscose. Sometimes it may be more and less also, depending upon the ultimate fabric requirement. It is there. Since we are the leader in polyester viscose dyed yarn as well as in the PV suiting, so it is, and then we have range of dyed yarns. So that's why we are leader in that. The polyviscose dyed yarn, you see, with our yarn, 0.6 million fabric is woven in India and abroad per day. So 0.6 million. And Bhilwara has a capacity of around 90 million meters per month. So close to 25% of our yarn is being used for PV suiting. And PV suiting is the most comfortable suitings because 35% viscose gives the more comfort near to the cotton, and it's a man-made synthetic fiber. So the PV and also replacing polywool fabrics and all, it has all the elegant look, like all the jacketing clothes and summer suits and all polyviscose. So it has a demand, and we are the leader because of our range and our capability to produce. And we have produced over the years since 95 more than 20,000 colors, which is a library of the colors, where the Pantone shade colors is only 7,000 colors. So with the mixture of colors, with the frosted and all, and different count, different blends. So that's why how the Sangam India is planning and getting a better advantage, because that yarn we can convert into fabric and the better finishing, because we have one of the good process house capacity of around 75 lakhs meter per month is the capacity of our processing. So that also adds to our validation in terms of processing and all. So end-to-end solution to the customers.
And also with regards to viscose supplier, so actually Grasim is one of the only suppliers, and it is the largest in the world.
Yeah, 18 dyed yarns, 80%.
Yes. So that there is no other. It's a monopoly business there.
Sir, if we take our market share currently, what is the total size of the business, the yarn business in the country, and what should be our market share? What should be a fair understanding?
Yes, see, textile is a very varied field. There are various counts, various shades, various compositions. So it is
Filaments.
So it is very, very difficult to actually to put a number to that and say what our market share is, because we can talk about the segment we are in. So that is otherwise, there is cotton yarn, there's PC yarn. Exactly. There are a lot of categories there.
Filaments.
So in this PV yarn part, what should be our market share for the country?
I think it's anywhere between 20 to 25% there.
Yes.
The last 2 points I had. Firstly, sir, we have seen in many cases that earlier textile companies have gone through rough patches and there has been capital restructuring. So had any time this company never. Okay, so we also find that there is, in the shareholding pattern, we find Autumn Investment and Infrastructure holding around closer to 11% equity in the company. So are these strategic investors? Because these people are generally present in companies where there is any debt crisis, or they buy the debt or convert into equity. So that was my reason. How do we classify them? If you could have any.
They are purely a public shareholder. It has got nothing to do with any kind of debt profile in the company.
Correct. Uh, right, sir. I'm done with the question. And you mentioned 4,000 crore top line post this the capex जो हो जाएंगे आपके FY26.
FY26, yes.
ये आज के प्राइसिंग के हिसाब से आप बता रहे हैं.
See, आज के प्राइसिंग के हिसाब से you have to consider about 5%, 5 to 6% inflation year on year, because there will be something that जो normal inflation level country का वो तो factoring करना पड़ेगा.
वो करना पड़ेगा. और 12.5% का मार्जिन बता रहे हैं, एबिटा मार्जिन. अभी 9 महीने में क्या था सर हमारा एबिटा मार्जिन?
ये अपन करीबन 8% के ऊपर है. So as I mentioned, because see that this has been an exceptional year. There has been a continuous downfall in pricing every quarter and quarter. So there are obviously stock losses also factored in in this performance. And when the prices fall continuously, तो margin pressure थोड़ा ज़्यादा भी रहता है. And stocking पूरी mills के पास आ जाती है versus anywhere in the market. So that is played out, and we feel that this is probably at the bottom, and we should see an improvement going forward.
और हिस्टोरिकली क्या रहा है सर, अगर हम 5 साल का एवरेज लें अपने बिजनेस में, तो एबिटा मार्जिन क्या रेंज में ट्रेंड करता है?
See, as I said earlier, yarn margins 8 से 10% में आराम से ट्रेंड करते हैं. ये एक लॉन्ग टर्म एवरेज अपन देखते हैं तो. और जितना तो बिकॉज हमारा नंबर लास्ट 5 साल का देखना रेलिवेंट इसलिए नहीं होगा, बिकॉज हम कंटिन्यूसली वैल्यू एडिशन की तरफ बढ़ते जा रहे हैं. सो when we add value to from yarn to fabric, 8 से 10% margins on the value added percentage get added. तो जितना ज़्यादा उस तरफ बढ़ेंगे उतना margins बढ़ेगा.
तो गोइंग अहेड भी हम 10 प्लस एक्सपेक्ट करेंगे कंसिस्टेंट बेसिस पे, ये ईयर का मार्क टू मार्केट छोड़ दें अगर.
हाँ, सो आई थिंक 12 एक नंबर है जो हमको लगता है कि कर सकते हैं.
ओके सर. एंड जब प्रमोटर का सर जो हम देख रहे हैं प्रेजेंट 70% इक्विटी प्रमोटर होल्ड करते हैं, जिसमें सर मिस्टर सोनी और आप मिस्टर आई थिंक सोधानी दो नाम मेंशन किए हुए हैं. तो ये आर द प्रमोटर्स कोरिलेटेड, ये क्या स्ट्रक्चर है सर प्रमोटर का?
70% होल्डिंग प्रमोटर की, दैट इज बिटवीन प्रमोटर फैमिली एंड सो हाँ, मतलब 70% होल्डिंग है प्रमोटर्स की.
हाँ सर, नहीं, आई वाज जस्ट ट्राइंग टू अंडरस्टैंड दीज टू प्रमोटर्स आर कोरिलेटेड, सोनी एंड सोधानी, आई थिंक सो दैट इज मेंशन्ड देयर.
आई थिंक if you are referring to Mr. Vinod Sodani, he's my brother-in-law. Yes.
Okay. Right. ठीक है.
Thank you, Mr. Saket
For all
Kapoor.
the answers, sir, and thank you for the elaborate call, sir, and all the best to the team, sir. Hope for plant visit if going ahead, if that could be arranged.
Thank you. Most welcome.
Thank you, sir.
Thank you. Thank you, Mr. Saket Kapoor, sir. You can also have a look at Go India Stocks as a website, where most of your questions will be answered as well. We have another question from Mr. Devang Jain. What PLI incentive do we get from the government?
PLI only kicks in, I think, 25-26. Year 25-26 is the first year. So that will be so that is about so absolute number over a 5-year period is about 45 crores if we achieve all the benchmarks that is set by the scheme, and it is about 11% of the turnover first year. From the first year. So we expect about 200 crore turnover from the garment business coming in that year, and that 11% the first year, and then incremental benefits from there on.
Okay, sir. If anybody has any other question, they may raise their hand. We have another question from Ms. Prerna Junjunwala. Ma'am, you please go ahead.
Hello, sir. Thank you for the elaborate answers. I just wanted to understand the value addition portion largely, because yarn earns 8 to 10% margin on average, as you mentioned, but their share is coming down. So what could be the sustainable margin for our business? If you could just help us understand how the denim business is panning out, and how the garment business margins are there in your company, that will help.
Right. So when we say the share is coming down, the production capacity is not coming down. The production value will still remain. We are just adding further value to the yarn in towards denim and synthetic. So our raw materials for the denim and synthetic business are about 90% in-house yarn is used there, 85 to 90%, right? So the yarn margin will be intact for the entire quantity. And then whatever value we add on the denim and synthetic fabric side is where we add further 8 to 10% on that margin. So that is the way it should be looked at. So two-third business.
No, if you could help us understand what should be the margin in absolute terms for different businesses, that will be helpful, because different denim value addition will be different, and your PV value addition, fabric value addition will be different, and garments value addition will be different.
So if we see absolute numbers, I think denim numbers would be anywhere between 15 to 18%, and PV fabric numbers will be anywhere between 17 to 20%.
So, and garment will be sorry.
Garment is again anywhere between 15 to 20%.
So, sir, then 12.5% sustainable margins is low, no? Then you should be doing a little higher margins
Actually,
going forward.
I mean, when we produce fabric, 60% of the yarn is being consumed there. So you have to factor in that in.
Right. No, and also see 12.5%. If we see pure arithmetically, we can say it is low. But today yarn margins are on the lower side. So what you asked is a normalized number. When yarn margins are at about 8 to 10%, then adding value, that number can be changed. So today yarn margins are not there. That's why we are giving a conservative number.
Okay, I'll just repeat the numbers. Denim is 17 to 18%,
15 to 18.
and PV fabric is again 18 to 19%, and garment is also 15 to 17%.
Right.
Right, no? Okay. Okay. Sir, also, could you help us elaborate on the garment business? Do you export, or it is a domestic business? And in the PLI, what will be the product range?
So 90% in the garment
Yes.
is domestic, 10% is only export.
Yes.
And then PLI scheme, we are going for athleisure, sort of garments made from man-made filaments and all. So that will mostly for domestic and export as well. So we also supply a lot of things to a lot of brands, globally, Mark and Spencer, Decathlon and all. And so we are their approved vendors. So for India and abroad for their global sourcing. And so in times to come, it will increase because we have capex we have planned last year only. So it is on the implementation stage. Right.
Okay. Okay. So your current capacity of garmenting and post expansion capacity?
So I'll talk in terms of revenue. On our the capacity that we have today, we can achieve anywhere between 180 to 200 crore revenue. So we expect next year we should do about 150 and achieve full capacity utilization by FY26. So that is the year when the PLI kicks in.
More than 200 crores.
And what will be the revenue for PLI?
About 200 crores.
And you're investing 100 crores, right?
Yes.
So your revenue should be higher, no? Because it's
Here, see, for our garmenting unit is actually it is capex heavy because there are knitting machines that we are that we need to produce these garments. So it is not, we're not actually converting our fabric to these garments. So the seamless garments that we are doing are more capex heavy, and it is not related to the raw material is not what we are producing in our fabric or the yarn division. So that is a different segment altogether. And because of the knitting machines that are there, the capex is higher.
okay. I understood. I mean, I've seen your seamless factory, garment factory in Bhilwara. So I understand the business, but I was just trying to understand that PLI scheme is a 100 crore investment. Government requires double revenue in first year, and then it requires continuous growth going forward. So then how do you really achieve the incentives?
Actually, the PLI scheme, the base year is 25-26. You can even defer it. So it's not then next 5 years. So each year to complete investment, and the turnover 200 crores, both companies.
Sorry, sir, you're not audible. You're not audible.
So the PLI kicks in actually in FY 25-26. And that is the year where we have to achieve a 200 crore number, which we are confident of achieving. Sorry, can you hear me?
Yeah, I can hear you now. Yes, sir.
So 25-26 is the year where we have to achieve 200 crore, which we are quite confident that we will. And going forward, there is an incremental turnover that is required. That is about 25% growth year on year. But the scheme also allows, if there is a year that you don't do that number, and let's say next year you are able to achieve it, you will still get all the benefits. So the first year number is actually the biggest number. So 200 crores, 11% is about 22 crores. So that actually, so 50% of the PLI benefit is in the first year.
Okay, understood. So even if you achieve first year, I think you mean you are good enough to
Right.
get the incentives. Rest of the years, you're okay if you get half or not. Not much incentives is achieved. It's okay. That's what you are trying to say, because good number is achieved by then.
Right. So there are two things I like to highlight there. One, our expansion is not purely based on PLI incentive. It is still a viable business. One. And secondly, the good part about the PLI scheme is that it incentivizes you to grow at a faster pace, but it is not penalizing you if you don't. So whatever incentives you get in the initial years are still yours. If you don't achieve the incremental turnovers, only that year benefit is going to be missed. And the highest benefit is actually in the first year.
Okay, understood. Understood. I mean, I'm just trying to understand this PLI only, that our company is looking at taking all the year's benefits, or first year is good enough, and then whichever year they achieve.
So
Okay,
see,
types. Okay, understood.
the endeavor is to take benefits all the 5 years, but even if we miss a year, only that year incentive is missed.
Yeah, because it's very difficult. I mean, the PLI incentives that they have announced, 25% growth every year. I have not seen any business doing 25% growth every year in textile business consistently for next 5 years, So it's the scheme is only designed that way. We can't help it, but that's what I was thinking. Okay, great. Thank you, Anuragji. This was really helpful. I will come back to you in case of any further questions later on.
Thank you.
Thank you, Ms. Prerna Jhunjhunwala.
I think we are done with all the questions now. Anurag, you want to do any closing comments?
Right. So thank you everyone for joining the call today. We trust that we have addressed all your inquiries to your satisfaction. If you have any remaining unanswered questions, please don't hesitate to contact our investor relations agency advisors. We will be more than happy to assist you further. Thanks again.